Markets are heating up, and could Bitcoin make its way to 130K before it retraces? We'll break it down for you. My name is Paul Barron. Let's jump back into the show today. I want to thank our sponsor, and that is Salt Lending. If you guys are looking at maybe taking the timing right on getting a Bitcoin loan or digital asset loan, you can jump over to saltlending.com and do that right now. As Bitcoin comes down, that's the time to go in and actually take a little bit of that in a loan on your digital asset. That's the way to do it. Don't sell it. In fact, leverage against it and work that into your financial plan. You can unlock wealth and the potential of your Bitcoin just by jumping over to Salt. Just in 160 million off of crypto longs liquidated in the past hour. So this could just be, well, this is what happens when you have these longs going at this level so quickly. Let's take a look at some other things. Of course, one of the scenarios that plays into this is going to be gold. Gold prices hitting record highs near $4,000 an ounce. And everybody's still looking at this with global uncertainty, what we're dealing with, obviously, with the government shutdown. Isn't it an alternative out there along with Bitcoin? I think that's the way people are playing this right now. Are we in a currency confidence crisis? This is the thing everybody's questioning. Gold futures officially hit a record 4,000 an ounce. Last time gold doubled in under 2 years was in 1970s after we saw Bretton Woods happen. So there you go. Maybe it's happening again. Does this play against the dollar? Do we start to see maybe Bitcoin and other digital assets also come to this party playing out? Let me go to a quick clip. This is Ken Griffin talking about de-dollarization. Take a look.
I mean, it's part of the reason the dollar's depreciated by about 10% in the first half of this year. It's the single biggest decline in the US dollar in 6 months in 50 years. Gold is at record highs. And the appreciation in other dollar substitutes, to use that word loosely, in items like crypto, for example, is unbelievable. So we're seeing substantial asset inflation away from the dollar as people are looking for ways to effectively de-dollarize or de-risk their portfolios vis-a-vis US sovereign risk. I now view gold as a safe harbor asset in a way that the dollar used to be viewed. That's what's really concerning to me. And there's been plenty of published research in recent weeks, months, about foreign investors now, when they buy US equities, hedging the returns back to their local currency. So that, again, is a bifurcation of I'm going to bet on American business, but I want to immunize some of my sovereign exposure to the United States.
This is going to continue, I think, to push a lot of people into alternative assets, whether it's Bitcoin, Ethereum, other digital assets out there, including gold and silver. We'll get into that in a minute. Here's Pompliano talking about, is Bitcoin actually the debasement trade? Take a look.
And now you see investors saying, wait a second here, this quote-unquote debasement trade means that I don't have to go do all that work. I can simply just go and buy something like Bitcoin. And I think that really maybe the story of finance of this decade is that Bitcoin is becoming the hurdle rate, right? Historically, we've looked at things like the S&P. If you go back to 2020, the S&P is up 100% since 2020. Priced in Bitcoin is down 90%. All of the returns that people are talking about in traditional finance, most of them are negative because no one can beat Bitcoin. And so if you can't beat it, then we just say you got to buy it. And I think that's what a lot of investors are starting to do.
Gold has done better than Bitcoin this year. Do you think in the crypto community they see gold as an ally or is it a competitor?
Yeah, you know, it's funny that on one hand, Bitcoin and crypto folks, they're brothers in arms, right, in the fight against currency debasement. On the other hand, I think that the gold bugs are having a field day because they're outperforming Bitcoin. I think gold's up 50% this year. Bitcoin's up about 33%. What I will say is that the average return since 2015 of Bitcoin in Q4 is 60%. So the gold bugs, you know, you're not at the finish line for the year yet. Let's see what happens.
Well, we're going to see what happens. Peter Schiff, of course, is having his day right now, and he accuses the financial media to continuing to perpetuate the false narrative that Bitcoin is digital gold. Every time they mention gold, they interject Bitcoin. This is either because they bought into, you know, the con themselves, or they're beholden to their crypto industry advertisers. I don't know that that would be the case. I think it is, in general, a framework of how to report on it for mostly mainstream Wall Street and investors to understand what Bitcoin is. Goldman Sachs, though, is raising its gold price to $4,900. I don't know if this is going to be toward year end or if we're looking at a continued up track here for gold and silver. And remember, we've done a couple of silver videos talking about availability and even the scarcity of it that is going to continue to create some demand, things that you got to consider is this right here. Silver is up 68% year to date right now, and it's getting to a point where people are starting to wake up to this. I think if you've been watching our videos, you already have known about this. But the point being is that there is a lot happening. Now, beyond that, you got to take a look at the economy. One thing that is interesting, because I think a lot of people are now recasting what they're most interested in terms of performance of this economy and this administration. Prices and inflation lead across all sectors of both the left, center, and right. Housing, economic, health, and social lead pretty much most on left and center. I think these are the big ones that do impact society and also the economy a lot right now. I want to go to a clip real quick because this will get into a little bit more detail about whether or not this economy is going to put some more pressure on the Fed in reference to the next potential rate cut coming at the end of October. Take a look.
So inflation's going sideways, and this is why if I'm at the Fed, I want to be very careful not to go too much further with rate cuts when you've got inflation this much above target. I'd need to be convinced that the weakness in the labor market is sustained or maybe getting worse, because I think the neutral rate is not that much below where the Fed is right now. And I think part of the sluggishness in the labor market and in hiring is due to what's going on with small business.
So when you say you don't want them to go too much farther, you think one more is appropriate, or do we not know? So
the way I would look at it, my own view is the neutral rate right now. Most aggressive case I can make for the neutral rate is it's in the neighborhood of 3.5%, 3.75%. That's different than other people have said. That's 2.75% inflation and 0.75% to 1% real. Okay, we're at 4.25% right now.
So there's room.
There's not much. Above target inflation is a regressive tax on 85 million workers, American workers who make 55 grand a year or less, have lost 25% purchasing power.
They don't own stocks.
They don't have financial assets, and they're struggling to make ends meet.
All right, so there are some pressures right now that I think will play into Powell's predicament coming up here at the end of October. If you look at Polymarket, how many Fed rate cuts? Still holding on 3. We've got the 1 in. 2 more would be October, end of October, and early December for 2 more 25 basis point cuts. Now, with all that being said, what that analyst was kind of alluding to is inflation and how this looks in the near term and possibly in the long term. If you look at Trueflation right here, this is on the annual. You can kind of see that dip off of when we were at our highest, which was last December, right there hovering over 3%, down to our lowest back here in April, dropping to as low as 1.2. But since then, it has been a steady climb up. So the real question, has Powell tamed it or not? I think this is a very critical time for the Fed. And of course, it's a very critical time, I think, also for the market, because part of this is still pushing into, I think, 2 factors right now. 1, debasement on the dollar, and 2, what we're seeing on the economic side, which will, of course, effectuate what we're going to see on these Fed rate cuts. Those are going to be the driving force behind where this market goes from here. Now, there is a Bitcoin contingent out there that's calling for a 124K pivotal position. If you look at a couple of notes here, one thing to consider is this passive selling on Coinbase and taker selling on Binance. This, of course, led back to bleeding where we were, going back to 123K or 123.2. I think this is the real question is does this continue? If it does, then it maybe gets us back down to, say, 118, 117. But I think the bigger upside here is still an all-time high coming in October. That still is my prediction, is that we could see the 130 actually playing out for sure. Wouldn't be surprised to see a fake out below it, but overall a few weekly closes above 123 is needed. This will set the stage for the next 20 to 30% rally in the coming weeks. And I'm in agreement with that. I do think that, that 130 could get blasted through. I'm kind of in the line of, in October, the potential for a 130K to 140K Bitcoin. The real question is that the top when that occurs? Let me know in the comments what you guys think, where Bitcoin is going to be heading from here in the month of October, okay? in the month of October. Now, if you kind of consider all things, you have to look at where is the potential for this asset to continue to go up. Let me go to this clip because it explains about current investors. Take a look.
Do you think there's still people out there that are like, oh, Karen, I just don't know. Should I buy Bitcoin? I'm on the fence. Do those fence sitters still exist?
Of course they do.
Oh, yeah, absolutely, Brian. There was a Bank of America survey from a few weeks ago that showed more than 60% of investors still own 0% exposure to digital assets. That's quite a lot. The next step, and really what Congress legislation is really enabling, is for the rest of the digital assets to really have their place. Ethereum, Solana, these things are large tech platforms that are now growing at a rapid pace. And we believe Solana is on pace to be what could be the next generation mega cap tech company.
All right, so there you go. We've got a lot of potentials here in other assets, but really I think the question mark is how traditional investors look at crypto in general, blockchain, and kind of its future. If they see it like an AI play as early stage, then we could see a lot of access coming into the market. Other things you got to look at, crypto funds now saw a record 5.95 billion in inflows last week. This, of course, surpassed the previous week by $1 billion. Other things you kind of have to look at in general is the year to date on Ethereum is now seeing a record 13.7 billion in inflows, nearly triple that of last year. So very solid. Last Solana and XRP both recorded inflows last week of 706 million and 219.4 million respectively. This is the kind of inflows that we are seeing over on CoinShares. And I think the point being here, guys, is there's a lot still to go in terms of TradFi markets coming into this. I think this is mostly still crypto markets trading in crypto today, even though we are seeing institutional, of course, playing into that. Tokenized funds also will play into this. This is a market cap that could be a target of 1.9 trillion, according to Galaxy, by 2030. This would be big if we started to see those kind of numbers. The investable universe 2.0 is kind of what they're getting at of being the 1.9 trillion, but they're thinking also that this could also slide up to as much as 3.8 trillion if adoption accelerates. And that's the key thing. If adoption truly does accelerate, there is a big opening here for this 12th sector to really become something very big and very fast. Other things you have to consider right here is the strategy that you're taking around investing. A lot of people looked at this, trading was a discipline about managing positions, precision, all that kind of stuff. It's kind of changed a little bit. And now the most important thing, it's rather than be comfortable with what you're doing, it's actually having a ton of risk on most of the time. Those are going to be the things that actually start to leverage the difference between an average investor and someone who's going to win on this, because this is a very intriguing time right now. Everybody that probably watches our show, you're probably up. There's always opportunities here to do profit taking, which I recommend. Again, not financial advice, but the point being is you have to look at your own position. If you're in the right place at the right time, I mean, Bitcoin and Ethereum both in pretty consistent spots based on the lows that we saw in these bear markets. So if you were with us during the bear market, you're in pretty good shape. Just a quick look over on this chart right here is this point right here that we've inflected on is the retracement on today's red candle coming off that 124 after the 126 high. And the question that we've got good volume sentiment and pretty much all things clicking still on Bitcoin. So this may be a short-lived retracement. We're going to be watching it very closely along with that. And Ethereum and some of the key projects that are out there, including Solana, Sui, Avalanche, all of those we'll be reporting on this week. So make sure and stick around for all that. Get in on the Diamond Circle. It's a great place to get additional content from me. And of course, follow me out there on X at Paul Barron. We'll catch you next time right here on The Paul Barron Show.